Alrighty, welcome back to Crypto Learning Community. Today I have a lot of special things for you. This is going to be a two-part video. We're going to mainly talk about a recap from the previous trades I gave, how you would have went about trading the order flow that came, the market structure, and etc. So my strategies, thought process, and live kind of going back and recapping. And the second part is going to be more on market makers, right? So we're going to go over some theories and data, and it's following a very logical and strategical pattern. So let's go ahead and hop right into it. So I'm going to first start off with the price action that's happened since yesterday and what I'd been sharing from the previous video if you haven't seen that. So in the previous video we were taking longs from this level here, and we wrote it up to we didn't take the high. I was telling y'all this is protected, so if we take that, I gave higher targets, but for the most part I'd cut out 75% here and let the rest ride, and then we got stopped out, right? It came back and stop loss at entry kind of thing. The other thing we were looking for is a continuation of market structure. So as you can see here, this was our market structure. I wouldn't include this because it's a wick and not a body close, but that's all it is, right? Nothing crazy. Do that one. So market structure has been ultimately bearish. Okay, nothing hard. We even had we have a little supply zone. That's where our entry was on that order block. Wrote it down, taking liquidity, targeting liquidity, so you hedge against your long, right? Because you're trying to get that reversal, and we did get a bounce, right? That's what these trades always are. You treat them as bounces, you treat them as scalps and potential bounces. I'm not much of a swing trader, but I do have my strategies for that, and I'm going to go over that here soon. So we can see here, yeah, we had the hourly bull div and all that, and smaller time frame bull divs. That's why we took that long there. And then even on these shorts, we had some bear divs as well. So you have reasons for both ways. It's all respective and relevant. I'd even been, so the things I was mentioning before is this support resistance pattern here. This kind of wedge formation. It seems to be, and what I'm concluding, and to continue my hypothesis on, is that, where's the paint tool? So this is an accumulation, this is your manipulation, and then we could have a nice distribution down. These are my thoughts, all right, using some of my liquidity and market maker methods. It's really a logic and reasoning based method. But that's what I'm getting out of it. Have I? Okay. We do have some interesting things going on that I would like to go over. So there's two ways this could play out. We could continue dumping down, or we could come up to this nice and lovely golden pocket area before coming down, or we could just clear. I guess this is protected now. Or we could just clear out the protected, do a little SFP event, a little manipulation before continuing down. So moving on to market maker and liquidity, logic and reasoning. One of my favorite tools is Bookmap because it shows liquidity of limit orders, and you also have like Hyblock and CoinGlass and these other heat maps and liquidation maps that show where liquidity and liquidations lie. For instance, I'm going to bring up Bookmap now. Now I know I use this tool a lot and it might look crazy if you're new here, but it's really nothing crazy. Alright? All you're seeing is people's orders. Okay? We can see right here at 101,000 there's 671 Bitcoin being sold. That is liquidity, right? We can see here on the heat map at about 99,000 there's a bunch of liquidity. So and that's in liquidations. So these are different tools to gauge where liquidity is. Liquidity is what market makers, these large players, use to fill their orders and to unfill their orders, right? To take profits on. So this often lies at highs and lows. These are very, especially when you have confluence on that, right? You might think like, hey, there's one order here, or like, okay, let's look at this for instance. We can see right here a order of 105 Bitcoin at 96,000. It's a psychological level. It's probably a high, right? Let's go and double check that. Let's go down the fractal. Let's go to 12. So at 96, yeah, we kind of, I mean, we have this high right here, 95,925. So that liquidity goes up to about 96k. So it's we have a high here. We have psychological level, but that's not going to be the only place they fill their orders, right? They ladder their orders, and there's several market makers at that, and that's where you get that's where you get this here and this here. So the same way we have these orders going up, we had that previously. If you go and reference the last video, you'll see that I was talking about, hey, you know, Bookmap's telling us we're going to go down. Yeah, we're going to get a bounce here. I took along there. We made money off that scalp, right? Close at entry. That was this here. We came down, all right? And then we came down farther, and we took those levels. Where did I say we were looking for longs? 94,000. And yes, it did come down to 93.5. So it took that as well and came a little farther. But ultimately, that all lies at this low here. Where does that coincide? Exactly 94,000. Okay, so a lot of people trade stuff like fair value gaps. I'm not saying that stuff's wrong. If you have a system, and statistically speaking, you have a way that manages when to get in and when to get out, and you make money, power to you, right? I'm not saying my method's the way, and other people that use my methods are the way. All the systems work, and I'm going to talk about that too. All these systems work, but you have to have a plan. You have to have, okay, this is my entry. This is where I'm looking to get out. This is what I'm looking for to continue this plan. This is what I'm not looking for. Like if this happens, you know, hey, that's bad, get out kind of thing. You have to know those kinds of things. That's called risk management, and you're not going to know it all. So I understand, like, it comes with staring at the charts and your due diligence, just getting involved, and over time these things kind of develop. Really the best way to trade is developing your instincts and your gut. Being honest, because a lot of this is a lot of live data, or at least in day trading, right? You're taking in lots of live data, lots of different scenarios. The daily can be bullish, while the 4 hours bearish, while the hourly is bullish, while the 15-minute is bearish, right? Like if you're in a range or just going down the fractal, your sentiment has to change, and so you have to understand several different points of view and which one carry more weight, what you're looking for, and what you're not looking for. Or when I say that, it sounds kind of weird. When I say that, I'm saying like what you're looking for to not happen, I should say. Alright, so moving on. Let's I want to continue on Bookmap now that I've given you that. Let's give some examples, right? So we see here there's a lot of interest at 101,000. And if anything, if you look closely, it's actually kind of front-running it. Just slightly front-running. So let's go look. We're looking for correlations. As a trader, that's all we do is look for correlations, right? This has happened before. This is what happened when that happened. And you find the statistics of those kinds of things to act upon them with the trade. And using other confluences and correlations to manage your risk. Excuse me. So at 101,000, we have this high here. We have an order block up here. We have a high. We have the 786 of the range from that being here to this low here. So we have lots of confluence for that level to potentially get a reversal. Now, when you think about market makers, they develop price action in certain manners that fill their orders or close their orders. They manipulate price in a manner that generates liquidity, and then they act on those setups, right? So sometimes, like a pattern like this will work, right? Come down, we do a retest, and then we go up and claim that liquidity. Or sometimes this will be your manipulation event to a distribution event. So it can really go both ways, and you don't hear that being talked about a lot, but a lot of price action and levels, they're generated for, yes, they can be respected, they can give you a bounce or an opportunity to make money. Will they always fly up straight to your targets? No. Will they respect it temporarily sometimes? Yes. Sometimes you might get lucky and it will just be super simple and easy. That is rarely the case. We know for a fact that the markets are on purpose made to be very hard to trade. That means there's going to be a lot of SFPs, swing failure patterns. That's what we saw right here, right? Didn't quite close a body below this low. It just wicked down there. And then what did it do? Came and cleared the top of that before ultimately coming down. It does these things on purpose. There is a reason. You as a trader need to ask yourself, why did that happen? Why didn't that work? Okay? And start looking at that data and figuring out, okay, this happens consistently. This is an obvious trap. And eventually your gut, your instinct is going to start catching that. You're going to be like, I've seen this. I know how to prepare for that. You're not going to be so one-sided saying, oh, hey, look, we have a resistance here. We have a support here. Go long right here. No stop loss. Or risking a tunnel on this trade and not managing your risk. Targeting some ridiculous level like this liquidity here. 102, 500 is that as a major level, right? But if you ask me, it's probably going to be protected. Why am I saying that? Well, Bookmap, right? Bookmap kind of gives me hints at this. Now, it's not guaranteed, but this is the information we currently have. This is live. Within like 3 to 5 seconds, this is live information you're seeing. Okay? Now, once we get up to 109,900 or 101,000, just round it, or even slightly moving up, right? It's our job to go back or to then go look at the new live data we've seen. Is market structure holding? Are there divergences? How's money flow? How's liquidations? How does the order book look? And I'm just now thinking of something else that I talked about to why we could be going a little lower too. Some more confluences, and that was our red dot on the daily time frame. I don't really like how this would look for bullish divergences. I wouldn't measure it off of this low, I'd measure it off of here. But technically, we could have a bullish divergence right now, okay? Momentum wave is already pretty sharp down, but it's still within reason. We have a nice wick down here, right? Lower low, higher low, bullish divergence on the daily time frame. We still do need a green dot, yes. It does look like the following day, like today's the 18th. It's actually 9:35 p.m. But it looks like Wednesday's going to tell us a lot. So if you're seeing this on time, longs are looking sexy. I already have the long setup. Look, we've taken that. We're still in this. I'm still targeting that 100 75,000 level, front running, right? Of course. So, I mean, there's that. The red dot gave us a push down. We're very primed to come up. Okay? Doesn't mean we have to, but we are primed, in my opinion. Continuing on to Bookmap. Let's build off of this thought and this theory, right? Okay, daily time frame, we get a bullish divergence, how does liquidity look? How does the Bookmap look, etc.? So, simply that I understand we do have these limit orders below us, but look how far. Which limit orders are we attacking right now? Is it the lower levels? Or is it the higher levels? It's these higher levels, right? Order flow right now is taking us higher and is filling larger orders. Now, right now it's Asia. It's the evening. We can already plainly see large spoofing right here. The manipulation that occurs during Asia session and these later time frames. We just took. I've been eyeing this liquidity. We just took that liquidity right here, right? And look what's getting primed right below. This liquidity at about 92,500 is priming with this liquidity here. There's orders down there. That's how market makers trade, right? They're not trading all this stuff in between. I mean, they were filling up at 94 and whatnot. But now look. They're not trading this. They're trading at 96,000 and 92,500. What does that tell you as a trader? That should tell you, if the market makers aren't looking to take trades in here, why should I? Now, don't get me wrong. There could be opportunity. There could be an order block in here with a market structure flip where market structure comes down and then flips on a lower fractal, and then you use good risk management. There's good reasoning to us coming back up. But for now, we're up here. Okay? And the Bookmap looks the way it looks. Those are much smaller time frame scalps that I was just referencing and describing. This is more of a larger picture, right? Because these market makers, that's how they trade. It's over larger time frames. They need time to fill these orders and to generate market structure and they need to let people get in and trade in these crappy levels, right? Because truth be told, there's two types of traders. There's only two. There are those who are going to be trading with market structure. What does that mean? That means right now they're going short. But then there's also the second trader who is trading. Actually, I could say there's three. Let's talk about the second trader. He's going to see it. Lots of green candles. And you know what he's going to do? He's going to go long at the top. Right? Then there's the traders who, we're at the bottom, they go short. Why? Price action's been moving down really hard. They short the bottom. And there's the smarter traders who are following the market structure. And, for this example right here, we have the higher low, and they're going to short that. Then you have the traders who are going to long the tops and short the bottoms. There's smart money and there's stupid money. And it all comes down to generating liquidity and wrecking those people. So, and to kind of distinguish between the two, you have the people who say, this has been going down really far. Divergences, I'm going to take a long. And then you have the people who say, this has been going really far. I think it's going to keep going down. Okay? So they literally, same information, same data, two opposite mindsets, completely opposite mindsets. So you have to keep that in mind. Which kind of trader are you going to be? I think the dumbest one in a situation where we're currently at now would be the ones who are longing right now. If you were to trade this, I mean, just using simple market structure right now, you would have better odds. A 2-to-1 trade, stop loss behind your high, and just follow market structure. And then you come over here, go over to Bookmap and say, okay, we have interest up to 96,500. Something's happening at 97. Probably if I come up here, 97.5 is going to get interest too. Let's go look at those psychological levels and see where they coincide and line up. Alright, so we have 96,750 is where that high is. So 96,750. That seems to be safe. You have this. It's a bit of liquidity on it. It's 144 Bitcoins. So honestly, when I see it like this, it usually, these orders will fill up nice and dark like these orders will, if I'm being honest. But you won't know until you move up there, right? So you set an alert, alright? You can either front run the level with the small order and ladder in, or you can set an alert, and once price action makes its way there, you can then review your new data. And it'll be plain and simple. It'll be obvious. Is price action looking to go higher and violate this protected high, or is it looking to go lower? If you ask me, I think where they're gonna come violate this high, wick up into something in here maybe, and potentially come lower. Just off of the data I have right now, right? If I were to look at the higher fractal, if we get our green dot, you know, if we get that strength, and we start actually Bookmap switches up, you know, we get a body close above the protected, then we get a pullback into this area, and then we could start coming up higher. That could be that bull div playing out, and other confluences. I hope what I'm saying is getting to you and making sense. If I was to summarize it and kind of take a step back, we're just using logic and reasoning. We're observing the different scenarios that are likely and plausible, right? And, you know, is there opportunity at those levels? Like right here, if we get, let's see, there was a body close and was on 12-minute. So right now, for instance, if you were to look for a reversal pattern, obviously this is protected. We have body closes above this high. Whatever happens, let's see. Let's bring this right there. Alright, let's say this price action comes down, breaks this protected, and that's your low. And then it comes back up. There's your logic to take a trade, right? Boom. Order blocker, whatever, or even the smaller fractal of like 15 seconds, you get a flip market structure. If that works for you and shows that it's been being respected, you know, relative to recent price action, there's your trade. That's a 4-to-1. 2-to-1 even off of that. Of course you're going to target here. That's the liquidity. Remember, that's where market makers fill their orders. So market makers, in conclusion, they fill their orders off of highs and lows because it's what people have been taught, right? The trend is your friend. What does that mean? That means, hey, we're in a downtrend. You should take a trade here and target down here. You should put your stop loss here. What does that mean? That means there's liquidity here. Okay? That means market makers, they aren't taking their trades here. They're filling the orders up here. So you can either be one to trade with them, or you can have a plan to counter trade them, or to scalp. Because the truth is they've already filled up their orders in here, right? Let's go look at CVD for a second. So CVD stands for cumulative volume delta. And if we go and look at the price action, since right here, this high 96,700, open interest has been rising very sharply. Look at that, a nice move up, right? And look at what CVD is doing. It's coming out all the way to right here. And what happened? Or what is that telling us? That's telling us shorts are opening up. Okay? Shorts are opening up here. Why would shorts be opening up there? Stupid money and some smart money. It's using liquidity. That means they're going to be targeting lower. Eventually, these are going to need to take profit somewhere below. Oh, what would they be taking profit on? Probably these limit orders. Okay. So, let's continue to look at CVD. We have a bit of a market structure flip here, right? We're coming down, coming down, coming down. Boom, boom, boom. Flip upwards. False break, flip back the other way. And right in here is when things changed. And open interest had started closing. Orders were closing. People were getting either knocked out or orders are closing. And it brought price action back up. Now, truth be told, that's a lot harder to read and that's more speculative. Because this can tell us two things, and you aren't. Maybe you are. Maybe I'm ignorant and don't know how to decipher such data. But for me, that's all speculation. The only thing I know how to read on CVD is cheat sheet patterns, right? Divergences. In which, I'm kind of getting one, honestly. Let's go look at 1 minute for a second. Check this out. Let's go to... Let's get my cheat sheet for y'all. Make it nice and pretty for you. Easy to read. Alright. What are we getting? Well, we made a higher high. CVD's getting lower. And open interest is coming lower. I wonder if there's anything on our cheat sheet that follows such a pattern. I wonder. There could only be something telling us, right? Now, this isn't 100%. Just like everything you see, it's not 100%. But it's an indicator. It's an indication to something. And that being a bearish scenario. Now, with all indicators, you need to give them a certain level of weight, right? A bounce on an EMA might carry a certain level of weight. A market structure break might carry even more weight. An SFP might carry some weight, and a divergence might carry a lot of weight. It's up to you and your strategy to give different value to different indications and to have confluence. That's why confluence is so important. Okay, how much of this looks bullish? How much of this looks bearish? Okay, you might be getting mixed signals. Well, are your bullish signals stronger than your bearish signals, for instance? And this ties back into the last video I'd made. I told you, hey, I'm looking for longs here. I've taken a long here. We made our money off of the long, but I was very clear and apparent, like, hey, these these things don't look good. We need these things to change. And I was honest. I'm like, they don't look like, we had a red dot printing. There was like 4 hours until it printed. That 4-hour daily red dot brought us down, along with the liquidity that was below us. Okay, those things I give a lot of weight to. I know we have an hourly and 12-minute divergences, but those don't carry as much weight. It's like, it's like saying, oh, on the daily time frame we have a bullish divergence, but I'm gonna go short because on the 3-minute time frame we have a bearish divergence. Which do you think is gonna take you higher or lower? Okay, I'm not gonna answer that one. You should be able to figure that one out. If you can't, leave a comment or something, but that's how you need to think. I think I'm gonna go ahead and conclude. I've been ranting on for a while. I think I've covered just about everything. I'll do a little bit of a recap. So limit orders are liquidity, and these heat map liquidation levels are also liquidity. Market makers fill and close their orders on liquidity. That means highs and lows. Sorry, market structure traders. And not to say they can't fill their orders, and they will place limit orders, but it's very common that it's on liquidation levels. For instance, right now we have a very consistent level of liquidity at 95,850 and 96 and 96.5. 95,850 is about right here, which coincides with where we're wicking and rejecting from, right? It's bouncing off of that order. But then we also have liquidity at 96. Let's see, what's that 96.7? Is there anything there? I'm already forgetting. 96.5. It's more or less. We do have these. If you see here, there's a faint order there, and then the 97 level. And that's often where the wicks come in and fill those and jump that little gap. So we have 96 here, about here on this order block, and 96.725. 97 being closer to this high in liquidity there. Fairly, or we can so we could confidently say, like, hey, there's liquidity here. They could come and take that, fill those orders. Another thing you can confluence with is your liquidation heat maps. For instance, 99,000 level, or on here we have right there is about our, actually it's more like right here is about our 101,000 level, which is this liquidity here. Take out 100,000 psychological level, that'd be the ultimate level to look for shorts. And that's about it. Yeah, I don't want to overcomplicate it. I hope this has helped you in understanding market makers and trading and the perspectives and mindset you need to accurately read data and to make decisive trades and to manage your own risk. A lot of it, comes as price action develops. So set your alerts. It's really important to watch what happens once highs or lows are taken. It's not so like you could have been chilling this entire time, right? Set your alert up here or down here. Because once we broke this low, that's when we started doing market structure down. Sometimes you could do absolutely nothing for almost 2 days. So, you could trade that internally. I'm not saying you can't, but I'm saying, you don't always have to be staring at the screen, even though the new data is important, right? It's what alerts are for. It's what I like to do. I use protected and unprotected, and I'll set alerts on them. Boom. Right? Alright, well, I hope this has helped. If you have any questions, thoughts, and want to build off of this, please leave it in the comments. A lot of this is logic and reasoning and theory based, but there's data to back it, and it's not nonsense. It might coincide with your strategies, it might not. I use a lot of Wyckoff and liquidation and market maker strategies. Meanwhile, you might use something different. Doesn't mean it doesn't work. So I hope this helped, and God bless. Trade safe and manage your risks. Thanks for watching.